Hi everyone, welcome to this time scrolling finance. Well, last week China's bonds market was okay. Economic data came out but didn't bother both China's stocks market and the bonds market much. And the bonds market gradually adapted to life, which is under high pressure from the stocks market. So as always, let's have a quick review of the bonds market, then check out details part. Alright? Total bond yield curve has gone up since the week before. Yields of 3, 5, 10, and 30 years term went up 1.5, 0.5, 1, and 1.5 basis points. If we compare to the one of December 9th last year, the curve kept twisted. Yields of 3, 5, and 30 years terms went up 13, 3, and 8.5 basis points. Yields of 10 years term went down 4 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds shrank, with 3-year spread was 52 basis points. About actions of investment agencies, in last week, for short and middle-term bonds, big banks, policy banks, and the funds bought 77 billion yuan together. City commercial banks and agricultural commercial banks sold 117 billion yuan together. And for long and ultra-long-term bonds, funds bought 28 billion yuan, whereas city commercial banks, agricultural commercial banks, and joint stock banks sold almost 60 billion yuan together. Next, let's check out details part and see what happened last week. In terms of fundamentals, first, economic data came out, and it was like a hit the trough. Industrial added value, fixed asset investment, and total retail sales of consumer goods were 5.2%, 0.5%, and 3.4%, or worse than last month. Especially the fixed asset investment, 0.5% has been the worst value since the very beginning. The picture was the same in the real estate market, from competitive investment in real estate development to floor space of newly started buildings. All 6 indicators were lower than last month. So we can conclude that the demand for house from both residents and developers was weak. Though our economy has replaced this old machine with a high technology industrial engine, but it definitely pulls down the recovery process. Second, Federal Reserve Chairman Jerome Powell announced a cut of 25 basis points, which was expected but gives our PBOC more space on monetary policies. Third, the SSE Composite Index almost hit 3,900 points last week, which was still a strong performance, and it will last at least the next 2 weeks. So the trend will be going on. Fourth, the leader of China and the United States had a conference in Madrid. The press said they had a natural consequence. And like I said before, the tariff negotiation is a long-run period, and I really hope we can make a good arrangement without any international bullies. So we take all this information together. Fundamentals has been in the trough for a long time. The outside was neutral but gives us more space. A-shares was still strong, and the stock bond seesaw effect is out there. So from long and ultra-long-term view, let's say it is not that safe. If you are faithful with yourself, you can just buy some odds to win trading gains. Otherwise, it's not a very wise strategy in this period of time. For funding conditions, last week was tight for price but loose for volume. Last week was the tax season, and the financing price for non-banking financial agencies was around 1.5% for overnight, slightly higher than the week before. And the PBOC changed the bidding method of the 14 days reverse repurchase operation to multi-price bidding, which I think was a good sign about the loose attitude towards the bonds market. So from short and middle terms view, the short and middle terms bonds are still a good choice for the safety feeding. Then what should we pay attention next? First, our actions of monetary policies. Do we follow the cuts procedure of the Federal Reserve or resume the treasury bonds purchasing? Second, next week is the time for the financing to cross from third quarter to fourth quarter. Considering the PBOC's action about 14 days open market operation, there is a high chance to restart the 14 days reverse repurchase operation to stable the funding conditions. Third, the scar effect from the September 24th last year. Well, last time the bond yields increased to a high extent. And the next Monday, the government will have the same meeting again, so be careful of this. About the bond investment strategies, token all, the total investment vibe is friendly to short and middle terms, so I keep the same strategy just as last week. buying some short and middle-term bonds to take care of both profits and risk control. And if yields of long and ultra-long-term bonds adjust to real high, we can buy some and hope to have trading gains. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding, experience, and waiting for you. So bye guys, until next time.